Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. This is Morning Forex Technical Report, where I take a look at some of the technicals that are driving the currency market. So let's get started. We'll start by taking a look at the euro versus US dollar. As you can see, the price has moved higher in trading here today. Yesterday, we saw the opposite. The price moved lower to start the trading week, with the price moving below the 100-hour moving average after consolidating above and below it in the Asian session. In the New York session, the market came in, and London and New York session, the market came in, started to move back below that 100-hour moving average, and then in the New York session, fell below the 200-hour moving average in this swing area. The swing area encompasses a number of different swing highs and also swing lows going back in time. Right here, some swing lows and some swing highs. You can see where the market found either support or resistance against that level, and in the last move to the upside last week, the price moved above that swing area and raced up to a new cycle high 110.75 before rotating to the downside on Friday, and continued that move on Monday's trade. The break below the 200-hour moving average in the swing area took the price down to around 109.06-ish type area before rotating back to the upside. In the Asian session here today, the price moved higher, and in the late Asian, early European session, the price did extend back above the 200-hour moving average, and that turned sellers into buyers on the disappointment of the failed breakdown here. So we sit and trade between the 100 and 200-hour moving averages. On the top side, the 100-hour moving average currently comes in at 1.0991, 200-hour moving average, but on the downside comes in at 1.0947, and we currently trade at 1.0960, closer to the lower end now, but it wasn't very long ago that we were up near the higher end of those two moving averages. So we're sort of in a battle here. The sellers had their opportunity to take this pair lower, and they failed. The price moved back above the 200-hour moving average. So nevertheless, we are still below the 100-hour moving average, and also watch this swing area on the top side that comes in right through here, where we had different highs, and then we found support against it, and then moved back below it and found this level as a resistance before moving to the downside. So this area between 109.99, right around the 110 level, would be another key level. So flip a coin, because that's what the market is saying to you now in the euro versus US dollar. Let's take a look at the dollar versus yen, and on the 4-hour chart, spread it out a little bit here, you can see the importance of this area between the 50% retracement right around that level, 133.74, and the 133.87 level. There's a number of different, this is again the 4-hour chart where the market had a number of different highs through here. Admittedly, it went above it here, but failed, and reused that area as resistance before moving to the downside, and then moved back up to this level by the end of last week, and tested that level into the close in early trading on Monday. The market didn't find support near the level, moved to the upside, testing the 61.8%, or got close to the 61.8% retracement level, but now moving back down in trading here today, moving down toward the 50% retracement toward this swing area. If we move back below the 50%, that's of this move from this high right here to this low right here. If we move back below that 50% retracement, that would be in this swing area, that would be more bearish, and have traders looking toward the 200-hour moving average and then the 100-day moving average. Those are two key moving averages on the downside. So watch the 50% retracement level, 133.77 level in this currency pair. Let's just put it on the hourly chart, see if there's any clues from that. And if we look at this pair, 133.468 level is the 100-hour moving average down here. So here's that swing area that I started talking about. Again, we moved above it in one day last week, but could not sustain the momentum above that. You can see that here. And in trading on Monday's trade, we found support near that level and pushed the upside. So we are back down, testing that area. 100-hour moving average of 133.46 would be a target if we break below the 77 level. Let's take a look at the sterling versus US dollar next. And this currency pair moved higher. We had employment data come out of the UK here today, and we saw earnings move much higher than expectations, and that got the inflation bug moving and helped push the sterling versus US dollar sharply to the upside here. In the process, the price retraced all the declines from yesterday and then some. Looked like the sellers were going to take control in trading yesterday, but we did find some support buyers near this swing area through here, where we had again a number of different swing lows and swing highs through this area before rotating to the upside and the move back to the downside. Right here we found support against the level, and we did the same thing in trading yesterday on the move to the downside. Found support in that yellow swing area here, rotated back to the upside, and trading here today. The data forced the price back to the upside, or helped to move to the upside, and we're currently trading in between the 100 and 200 hour moving averages, like the euro versus US dollar, except these moving averages a little bit closer together. 124.37, 124.52 are where those levels got come in, and actually we're trading back up below the 200 hour moving average here. So we did find some sellers against the 100 hour moving average and trading 134.30 below the 200 hour moving average. So the sellers trying to hold the level in through here against the moving averages, keep the bearish bias intact here for the sterling versus US dollar. We'll see if the price can stay below that level in trading here today. This area right here, if it can, the bears remain more in control. Finally, let's take a look at the dollar versus Canada, because we are testing some key moving averages, including the 100-hour moving average of 133.81. Also, the 200-day moving average, that's a green line in this chart, comes in near the 134 level. So 81, 134. If we get above that level, that would be more bullish here for the dollar versus Canada. As you can see in trading here today, the market stayed below the 200-day moving average after moving above it yesterday, and above the 100 and 100-hour and 200-day moving average through here, but closed right around it. And so this level was going to be a key barometer, and we remained below it. So watch the 134 level on the top side. As long as the price can remain below that level, the bears probably have more control in the dollar versus Canada. They would have complete control, staying below the 100-hour moving average at 133.81. So there you have a look at some of the major currency pairs to start your trading day from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.